Well, welcome everybody to the Business Insurance Zone. My name is Eric Palmer, and today is part 2 of our long-term care videos that we're putting together here with, of course, our guru, Leni Cohen. Leni, welcome back to part 2 of the show.
Thank you.
Now, what we want to do with this particular episode is examine the demographic that is the age 40 to 55. What's interesting about this group is that they are relatively similar to the 20 to 40s. They still have a pretty decent health, maybe a blood pressure pill or a cholesterol pill, right?
They could be taking one medication. They may or may not have had one long-term episode, but they have not been stopped in their tracks yet.
Now, what's interesting though, at this stage in their life, more often than not, they have growing families, their careers get very serious, more responsibilities, more obligations. What does that mean in terms of experiencing a long-term care event now, especially with this particular group of people?
Interestingly enough, this is the age group at which I came into long-term care as a caregiver. I was 43 years old, so I have an enormous amount of experience for this group. I understand the emotional, physical, and financial burdens that occur if they were caregivers.
Right.
And so there are two sides to this. In your 40s and 50s, you still have parents. Okay, they're relatively young. We're all living longer.
Right.
And you may have grandparents who are approaching 100. So they're seeing, once again, just as the younger adults are, the evidence of health issues, financial issues that are touching their older parents and grandparents. These 40 to 55-year-olds are more stable in their careers.
Right.
And the breadwinners are very into protecting their loved ones. But they still have myths, about how they're going to handle a long-term care event or extended home care event if it takes them out of their daily living.
Now, what's interesting is exactly what you said. There's, even though this demographic has evolved to start to understand really the need for coverage or what could happen in the event that they didn't have the coverage in place, especially because in your 40s and 50s, that's when your folks are experiencing all the issues that you're going to experience. So they're starting to learn firsthand what it looks like when somebody has dementia or what it's like when you have to put somebody into an at-home care or an extended home care type of situation. Yet they still are not flocking and lining up to buy long-term care or extended home care, as we're calling it. So let's talk about the first myth. It's very similar, in fact, to some of the myths that we saw in the earlier group, but again, the myth here with this particular group is that my health insurance, my disability insurance, it's going to cover me for my extended care. And I think we did a pretty good job talking about it in the first part 1, but again, touch on that a little bit.
Okay, so this age category still has health insurance at work, may have disability, may have critical care insurance. And although they're a little more open to understanding the need, they're still building their portfolios. So they believe that the health insurance will cover an extended event. They believe that their disability may cover the extended event and critical care. And the fact of the matter is the health insurance, again, will cover hospital surgeries, doctors, medications. But it doesn't cover what is 99% of all care at home. That's custodial care.
Custodial care. Explain that to us a little bit.
Custodial care is after the skilled care, after you have the surgery and you're sent home and you're laid up in bed, you may not be able to get to the refrigerator to feed yourself. You may not be able to drive to physical therapy. You may not be able to get out at all. And people do not realize that the largest percentage of care of any condition, event, surgery that goes out for 3 months or longer is custodial care. That's the largest percentage.
That's really pretty interesting. And in fact, that's one of the more expensive types of care as well, is because, more often than not, especially with the demographics that we're dealing with today, the baby boomer generations, the Gen X's and the Gen Y's, we're sort of, I would say, more independent in that we don't want to go have be in a nursing home, or we don't want to be in a facility. We want to be in our own homes. We want somebody to come to us. That gets expensive.
It does, not necessarily though, okay? This age category is much more open to talking about long-term or extended care. They will look at it. The fact of the matter is, any type of coverage, whether it's extensive or just minimal, will protect you, will protect your loved ones, will protect all your future financial plans, which is the most important thing. So there is a greater need and a greater understanding for this age category to take a look at it. And they'll have questions like, where am I going to have this care if I look at it? Will I be able to stay at home? Who's going to take care of me?
Right. And
they have a much greater risk at this age of losing all of whatever retirement plans they have put into place.
And I think that's a major issue that we're dealing with right now as a society, is that we've already got a retirement problem. They say that the average 401k, I think it was a statistic that came out in 2011, was something like $78,000. So if you have $78,000 in your 401k and you're approaching an age group that is closer to that point where you may or may not need this long-term care, to only have $78,000 to retire with in the first place, you're going to have a heck of a time covering those costs of your extended care needs. So I think we tend to forget where does the money come from if you don't have the coverage in place. And the very first place, of course, is that retirement bucket. Now, I want to move on to the next myth. It's, I will never need long-term care. I think a lot of people think that way, and there's been this sort of misnomer that you pay premiums. It's almost like the auto insurance, right? If you never get in a car accident, you've wasted all that money. Right. We talked about it a lot in part one, but again, let's touch real quick. Why is that a myth, and why should we stop thinking that way?
Because the 40 to 50-year-olds are much closer to the risk of 65. After 65, the percentage of individuals who will have at least one long-term care event in their lives goes up to 70%. You like to think you're going to be in the 30%, and that's wonderful,
right.
Okay? But you're right. This is the same kind of insurance that you look at for auto insurance. You do not wake up in the morning and say, gee, I wish I could get into an auto accident this morning so I could utilize the money that I pay every year. It just doesn't work that way. You have to protect your loved ones, your growing family, and you are that much closer to retirement. You have to protect it.
You've got to play it safe. Now, again, if you want to get your hands on any of these myths and facts, we have the prints out for them. Send an email off to Leni, leni.cohen@brokersalliance.com. If there's a case you're thinking of, a client you want to discuss, or a long-term care case that you actually tried to place and it was declined for whatever reason, get it over to Leni. She truly is an expert here in her field, and we want to take a look and help you get that thing placed. Now, let's talk about another myth. Long-term care is insurance for extended care needs. Explain that to me.
Okay. There's a difference between long-term care insurance and long-term care planning. Long-term care insurance is just a very important part of long-term care planning. You need to put a plan in place for an unexpected health issue that's going to take you out of commission for 3 months or longer, disrupt your work, disrupt their income. And the fact of the matter is, less than 1/3 of Americans 50 years and older have really planned for a long-term care event.
Now, that's really interesting. We think about that too when we talk about retirement planning or estate planning. It's more than just the one product that we sell. It could be a combination of things. It could be putting a real plan in place and how do you use the policy, who's in charge. We don't think about that with long-term care, so I think that's a really valid point, is it's more than just a long-term care policy from one particular insurance company. It's the plan surrounding that policy and whatever other potential things that you put in place to cover the plan in general. So, another thing to kind of glean off of this part two of long-term care is talk planning. Don't just talk about the policy. Now, one of the myths here that that we're going to talk about is something that's on the tip of everybody's tongue. It's Medicare and Medicaid, and the question is, or the myth is, Medicare and Medicaid will pay for my long-term care needs after age 65. Why is that a myth, Leni?
Well, Medicare is just health insurance age 65 and older. It's just another health insurance plan. And the fact of the matter is, when we talked about younger people, health insurance covers immediate care, skilled care, hospitals, doctors, medications. It does not cover the largest part of extended care or long-term care events, which is custodial care.
And we just talked about that earlier. Again,
Yes.
That's more of the long-term aftermath. You don't know necessarily how long that custodial care is even going to be needed. It's probably different for everybody, I would imagine, depending on how long it takes you to recover, or if recovery is
Correct.
even an option for you, depending on what the need was.
When you talk about Medicaid, Medicaid is a federally run program that is for the indigent and the poor, and it's strained. It's a strained program being overloaded. So there is no reason to think that most Americans will end up on Medicaid. And the fact of the matter is, in Obamacare, in the Affordable Care Act, they originally were going to put a long-term care element into the plan, and now they've taken it out. And what they've said is, basically, without saying it, is the individual now has to be responsible for their own long-term care.
Well, that's incredible. And again, it's passing the buck back to us. And of course, when you only make so much, your taxes are going up, you have all these variables, a broken retirement system. Most often than not, the last thing that we're thinking about is the need for long-term care or extended care. And I think hopefully what you've learned from Leni, and Leni, you're such a wealth of information, is that we need to be approaching our clients with this. We have to pay attention to the 20, 40-year-olds. We really have to pay attention to the 40 to 55. And of course, in part 3 that you'll see here, hopefully right after this show, we'll talk about the next demographic as well. But again, I think it's important to note that everybody needs this type of coverage, and we can't keep bearing it under the priority list of what we think we need to do for planning. So if you have any more questions, you have clients that you want to have us take a look at here, or if you want to get your hands on some of these materials, whether it's the myth and fact sheet or some of the sales tools that we have to approach these groups with, please send us an email here at Brokers Alliance. Send it directly to Leni. It's leni.cohen@brokersalliance.com. Again, thank you so much for taking the time to spend and learn a little bit more about extended home care and long-term care. Take a look at part 3. Watch part 1 if you haven't done so already, and we look forward to talking to you again. Take care.